Does your 529 plan offer a state tax benefit? If so, when do you need to make the contribution by? I've got a big update on our home state. That and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. The 529 plan is a tax shelter. You've got to consider it as part of your tax shelter strategy, especially as the Secure Act 2.0 passed a year ago, almost to the date, allows for a extra unique tax planning strategy of shifting dollars from a 529 plan over to a Roth IRA. Lots of hurdles there. I've done lots of videos on that. I'll do many more to discuss that strategy. But is funding a 529 plan part of your tax shelter strategy? If it is, here's how it works. It's essentially the Roth IRA, but for college, or I can't even say college anymore. They've expanded the use for education. When you make a contribution, there is no deduction on the federal level. At the federal, for federal IRS tax laws, no benefit when you make your contribution to the 529 plan. Once it's in there, all those dollars and the investment activity, it's all sheltered from tax. So interest, dividends, capital gains, it's all sheltered from tax. And then when you withdraw the money, if you withdraw the amount that you put in, no problem, okay, at a federal level. But the growth, if you withdraw that amount and you use it for qualified educational expenses, that growth comes out tax-free. Done lots of videos on what's a qualified educational expense. Any really required expense to attend college. So yes, tuition, room and board, books, those sorts of things, a computer, all of that applies. So the growth you can pull out tax-free as long as it's for college. So is that good enough? Yes, it is. That is good enough. Having tax sheltered and then tax-free growth, that's a big deal. But each state offers their own 529 plan. And for the state that you live in or the state that you pay taxes in, you want to take a look and say, well, is there a state tax benefit as well? I told you the federal rules. Many states, not all, not even most, I don't believe, but many states do offer a state tax incentive or state tax benefit to contribute. Why would they do this? Because they want citizens to be educated. And so they're encouraging you, get that education, and if you fund it, we'll give you a tax benefit. And if you fund it, we assume you'll use it and you'll stay educated and help promote jobs in our state and keep that tax revenue going. And so yeah, many states offer a state tax deduction or some sort of benefit from the state. Indiana, which is where our home office is, where I live, that offers it. We offer the very best tax incentive of any 529 plan out there. I hope other states follow. They haven't yet. This came out in 2007, and that is a state tax credit on your contribution up to a certain limit. Deductions are good because it saves you a percentage of tax. Credits are great because they save you dollar for dollar of tax. So how the Indiana state tax credit works, not county, it's a state tax credit, is you get a 20% tax credit on the first $7,500 that you contribute. It used to be $5,000, now $7,500. So if you put $7,500 in the Indiana 529 plan, then you get a state tax credit, not a county, a state tax credit, a credit against your Indiana state taxes of $1,500. And if you don't have that much in Indiana state taxes, then it's not refunded to you. And so I'm assuming I'll get many questions, like I often do when I talk about Indiana's college 529 plan credit is, well, what if I don't pay Indiana state taxes? Well, then there is no credit, right? Because the credit goes against Indiana state taxes. But whether it's your own state or Indiana or whenever, when do you need to make that contribution in order to get the tax credit? Is this one of those things where you've got to do it by the end of the calendar year for it to impact that year? Yes. For most states, almost all of them, you've got to make the contribution during that calendar year because any withdrawals from your 529 plan also need to be done in that calendar year. So they match up. Well, if you're contributing to get the tax benefit, it's got to be done the calendar year. And withdrawals to offset expenses need to happen that calendar year. And so that's been the logic. And guys, that's been the case for Indiana as well. That yes, you needed to postmark this thing. You need to get it in the account by 12/31, if not before. And my goodness, our team and serving clients, there's been lots of races and all sorts of issues trying to hit this deadline for clients that forget or whatever. And so it's been a big deal. Guys, I can't believe it. I cannot believe it. Kevin Korhorn received a communication, an update, almost middle of December. And we didn't see any other updates on this anywhere. In fact, it took him and me a few days to even look and say, really? Are we supposed to believe this? Indiana has now pushed the deadline for funding a 529 plan contribution and having it affect that calendar year up to April 15 of 2024. So they're now aligning it like an IRA or a Roth IRA, where you have up until your tax filing deadline, not including extensions, to fund it for the previous year. We are shocked. I don't know actually why they would do this. I mean, of course I love it, the flexibility, that's much better. I don't know what the incentive was. Obviously, all 529 plans need to update their systems and their infrastructure for this new Roth 529 to Roth IRA transfer. And when Indiana did that, they made this enhancement as well. So it's not going to affect most states, and really just a kind of public service announcement for those of you in Indiana. You now have a little bit extra time. Check on your state. If you are listening to this and you don't live in Indiana, make sure you understand your state's deadlines so you can make sure you get that full tax benefit. Last thing I'll say about this is if you do live in Indiana, or if your state does offer until, into the next year or until April 15 to fund it, well, now it does add one extra piece of communication that you've got to get right. And that is, when you're making a contribution during that window at the beginning of the year, you've got to communicate whether this is for a 2023 contribution or 2024. You have to. I'm a dinosaur. I've been around for when HSAs started. And for HSAs, when they said, yep, you can fund your HSA for last year, you can fund it up until April 15, banks never asked the question. So you would go in and make a contribution to your HSA in January, and the bank would never ask you, well, wait a second, is that for this year or for last year? And then you would just file your taxes, assuming it's for last year, and get a tax notice, and it would be a disaster trying to untangle that thing. And so we, for a long time, because banks and most institutions that offered HSAs, it's now a lot more, but because they didn't have the right infrastructure, we would just tell people, yes, you have up until April 15, but my goodness, if you can, get that thing funded during the calendar year, because logistically there's a good chance you'll avoid an error there. So you've got to have that awareness when you're now funding your Indiana 529 plan. All right, so be aware if something similar is applying to your 529 plan. Look at those rules. Of course, this is a part of your tax shelter strategy, so work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.